Good evening, guys. Welcome back to my channel. Alright, today's video is in regards to what we learned yesterday of how to draw our support and resistance line for intraday. So today I came across a particular script and used our method on it, and there was something different that happened over here, and I thought to share it with you. Okay, so here we have Hindalco, and as you guys know, this is a 5-minute candlestick chart, and along with that we just have the volume bars and nothing else. Alright, so what we do is initially we will try to mark our support and resistance. Now for us to have support, we will need two consecutive bullish bars, and the volumes also should be increasing along with price. Alright, so like over here you can see we have two consecutive bullish bars, as in the 930 bar has a higher high, higher low, and a higher close as compared to the 925 bar. At the same time, we need to see even the volume. The volume also should be increasing. But over here, the 925 bar volume is 469, and the 930 bar volume is 323. So basically over here, the price is increased, but the volume is reduced. So this would not suit us. Now we look at the next two bars, as in the 930 and the 935 bar. Over here also we have two consecutive bullish bars, as in the 935 bar has a higher high, higher low, and a higher close as compared to the 930 bar. And at the same time, we can even see the volume of the 930 and the 935 bar. There's an increase in the volume along with increase in the price. Alright, so we'll mark the immediate lower low as a support. Okay, now this is the interesting part that I wanted to show you guys. Now since we marked the support, we need to mark a resistance line. So over here we have two consecutive bearish bars, as in the 945 bar had a lower low, had a lower high, and a lower close, but the volumes did not correspond. The volume of the 940 bar was higher than the volume of the 945 bar. You can see it over here. So this does not suit our requirements. Now let's take the next two bars, 930, 945 and 950. We have two consecutive bearish bars, but again the volumes are decreasing and not increasing. So this doesn't suit us. But have a look here now. We have two consecutive bearish bars, alright, and we have the volume also increasing. The 950 bar had a volume of 235, and the 955 bar had a volume of 449. Alright, so this would constitute as our two candles that we would require to draw our resistance line. But over here, just have a look over here what it has done. It has broken up support line. Alright, so when this happens, when a candle breaks our support or resistance line that we have marked before even creating the opposite line, in this case before even creating the resistance, this support becomes invalid. Alright, so let's first mark a resistance line. This is our resistance line. Alright, since this candle broke our support before creating the resistance, this support becomes invalid. So what we do, we will just delete this line off. So this is not a valid support because it's been breached. Alright, so now we would wait for two consecutive bullish bars to occur so that we can draw into the support. So let's go down, down, down. We don't have any bullish, continuous two bullish bars, not here, not here, not here, not here. Here, if you guys can see, at 10:45 we have bullish bar. At 10:50 we have another bullish bar which is making a higher high, a higher low, and a higher close. So what we'll do, we will mark the immediate lower low as our support. Since it is these two bars that are in concern, so the immediate lower low would be this. Alright, so this is our initial support and resistance for the day for this particular script. So what we'll do now, we will wait for the price to break either the support or the resistance, and then we'll take our trade from there. Alright, so what we generally do is that we wait for the price to break, and not only break, the candle has to break either of these lines and close below these lines. So in this case, close below the support, which has occurred over here at 11:15. So once this closes below the support line, we take a trade over here at 11:15, and we keep our stop loss at the swing high. So this line over here will be a stop loss for the day. And you see, guys, the price has gone from, what was it, 199 all the way to 196, 3 rupees just in this trade. Alright, so let's take another one that we traded today. That would be Z Entertainment. Same logic over here. Okay, we would wait to draw our support and resistance lines before we take a trade. So again, let's see, what do we have? We have lower low, 2 consecutive bearish bars, a lower low, lower high, lower close, but the volume does not correspond. But look at here, the next bar, the 935 compared to the 930. Alright, so this is a bullish bar, a bearish bar. This too is a bearish bar. So we have 2 bearish bars, and we have the volume 2 corresponding to these bars. The 930 volume is lower than the 935 volume. So we will take the latest swing high as our support and mark it over there. Okay. Next, now we'll wait to draw our support line. Okay. Now look at this. We have over here a bullish bar, 2 consecutive bullish bars, but the volume does not support us. Because as you can see down over here, the volume does not support us. Let's look at this too. 2 consecutive bullish bars here, a higher high, higher low, and a higher close. Look at the volume. The volume seems equal, but have a look here. Have a look here in this area. All right. The 935 volume is 668. The 940 volume is 688. Hence, the volume has increased along with price. So this would be our support. Okay, so we have drawn our initial support and resistance for the day. Alright, and like this would be, let's say, our resistance, and this would be our support. Okay, so this is the resistance over here, and this is our support. So what we do, we wait for the price to break either of this, which is occurred over here at 11 o'clock. We wait for the price to close below this line, which it does. Then we take a short at 193, and a stop loss would be here. So a stop loss would be at the latest swing high. Since this is a support line has been breached, the latest swing high is here. So this would be a resistance. So this would be a stop loss. This would be a stop loss, and we take the trade here at 193. As you guys can see, the price, the next 2 candles itself, the price went from 193 all the way to, let's see where it goes, all the way to 192.05. Okay, so he got around 1 point in this, but still, I mean, that's pretty decent for intraday. So I just hope you guys understand what I'm trying to say over here is that if we keep our trading simple, it makes our life much more easier. All right, so I would request you guys, again, just try to go and do some R&D with this, check out a lot of scripts in this, and see whether it works over there. And I would like to hear what you guys have to say regarding this, and we can then start building on this for the next step. All right, guys, take care. Cheers.